Right, lads, this is the weekly breakdown for the upcoming week. I also dropped a Psycho Sundays episode, so if you haven't checked that out already, make sure you go and check that out. It's going to be a recurring thing from now on. Every Sunday, I'm going to drop the weekly breakdown for the upcoming week and also drop a Psycho Sundays episode, just making sure that we're both technically ready for the week ahead and also psychologically ready. So without further ado, let's get into the charts. A bit more snappy on the charts today. I just want to show you guys the indices market for our intermarket analysis this week. Spotted something quite interesting. Overall, we can see bearish price action across all the indices. You know, they're respecting bearish PDAs, and you know they move quite smoothly as indices typically tend to do. However, what we're seeing is, if we come over to the monthly with our hourly candles, right, month outlook on our hourly chart, we see some hourly SMT. So we see a failure to make a lower low on the S&P 500. If we go over to the Nasdaq E-mini, we see a lower low made on the Nasdaq E-mini. And then if we go over to the Dow Jones E-mini, just go to the June contract, we see it actually made a high, right? So we can see some SMT divergence in there, whereby 2 out of 3 failed to make a lower low, but one did make a lower low, which was the Nasdaq. So that's an indication that this was just like a temporary run on stops, and that we can probably expect to head lower from my assessment. And that's kind of further confluenced, in my opinion, by the fact that I saw last week that we saw kind of like a momentum shift in terms of bullish and bearishness when I was trading last week, with respect to, you know, foreign currencies, but then the dollar kind of took over again, and you know started to gain back its bullish momentum during the week. So that probably explains the smaller body on the candle, which we'll come to in a second. But yeah, that was like a main thing that I wanted to highlight to you guys. Also seeing that smart money are hedging bullishly on a 3-month horizon across all indices, except from the Dow Jones. So if we come and I can just go through the rest of the markets for you. Just wanted to show this one in particular. I wanted to show it, but in terms of my assessment from the other markets, I can say that grains is overall a bullish tone for grains across wheat, corn, and soybeans. And open interest is also falling, and we know that open interest is the cumulative short orders within the marketplace. So the grains are looking quite bullish. I can confirm that grains are bullish, as are livestock. So if we go down to livestock, so the 3 that we're tracking in livestock are the live cattle, the feeder cattle, and the lean hogs. Overall, livestock seems to be bullish as well. And there's sort of like neutral hedging on bonds, and there's no outstanding news that we can be sort of diametrically opposed to. Let's move on to the price action of the dollar. Looking at the weekly chart for the dollar, seeing as bullish momentum came back into the market, as you can see, what price did last week was we were heading up onto the drawn liquidity up here, but what happened was these rejection blocks, price reacted on these rejection blocks, came down, came down here and then started regaining its bullish momentum, going up, closing the week bullishly. So to me, that demonstrates some strength. Also, we have loads of bullish PDAs below price at the moment. You know, bullish order block over here. You know, some more bullish order blocks over here. We have bullish mitigation in here. We have also this inversion fair value gap in here, small one. And overall, we've been violating bearish PDAs. So this bearish order block got violated completely by this week's candle over here. Wasn't even considered, to be honest. But what I'm kind of looking at is sort of two scenarios. The last time when this drawn liquidity was created in the previous price leg, it respected this bearish breaker in here, this down move right before the liquidity was taken, right? So we expected this bearish breaker in here and sort of headed down to create the next price leg. So now heading back up to it, it could respect that after taking this liquidity and heading down. Or what we could potentially see is we could see some further upside disrespecting this and coming up into fill out this fair value gap in here, this sell side imbalance, and then also that would coincide with reacting within this weekly bearish order block and send prices lower. But in that scenario seems like a more likely scenario for me. Like if we're talking about into the future, this wouldn't happen this week, but that seems like a more likely scenario for me because of the fact that we're sort of waiting for the news of the Fed, whether or not they're going to cut rates or not. So, and that the next time the Fed would issue a statement, an FOMC statement, is I think the first week of May. So for that reason, I think that, you know, there's about 2 weeks, right? So there's enough time for this to play out. Because we have this week and then the following week after that. So that's sort of what I'm looking for, either scenario really. But certainly looking for this drawn liquidity and then possibly some downside, but not highly likely. So overall, I think we're going for another bullish week on the dollar this week, all things considered, especially the SMT divergence within the indices. Seeing as the US dollar is inversely proportional to stocks, the fact that there's been SMT divergence with the Nasdaq making a lower low after the other two failed to make a lower low, that kind of tells me that there is underlying weakness within the stocks, and therefore there should be some underlying strength, you know, being diametrically opposed to the stocks in the dollar, and therefore that would support the idea of this liquidity being taken this week and possibly some activity within this sell side imbalance over here. Moving on to the economic calendar for this upcoming week, I would stay clear of Monday. Monday is, in my opinion, likely to consolidate due to a lack of high impact or medium impact news for the dollar. Loads of high impact news for Tuesday, for, you know, the euro, for the pound, and for the US dollar. Looking at this, I can say that London is not going to be the most ideal, especially because of the amount of high impact news drivers on the foreign currencies. When there are high impact news drivers on foreign currencies, price tends to chop on them because it's kind of waiting for all of the high impact news to come out, which is why I don't necessarily like the idea of trading London on Tuesday. I'd more so be a London close trader within this time frame right here of 9:45 to 10 a.m. Looking for entries over there. Wednesday, Wednesday seems like a good day to trade London, trade New York. Nothing too crazy with news, so Wednesday looks like an ideal trading day as well, where we can look for opportunities. Thursday looks like an ideal London day as well, with also an ideal New York session day as well, and possibly London close as well. Especially what we've seen is when there's high impact news around New York and London close, perhaps your entry might chop around in the New York session, basically waiting for that high impact news around London close. So Thursday is also an interesting day as well, but it's an ideal day. Friday also seems like a good day. Friday seems like a good day across all of the ICT kill zones, across London 3 a.m., across New York here, and across London close. So in my opinion, looking for opportunities around Tuesday, Wednesday, Thursday, and Friday, with the overall premise of the week being bullish on the dollar and bearish on foreign currencies. Looking for that drawn liquidity that we mentioned. That's been the weekly breakdown for this week. Overall, we're bullish on the dollar, looking for that drawn liquidity. And also, it's important that we don't marry our weekly bias. We actually want to see it confirmed in price for us to actually, be sort of mindful of it and be going along with it, essentially. Another confluence would be watching the Sunday Open for you guys. Watching the Sunday Open, seeing whether or not we go above or below the Sunday opening price. Because much like how you have a power of 3 on a day, you also have a power of 3 on the weekly candle. So if we see price go, above the weekly opening price on the dollar, then that could be an indication that we're trying to price quickly towards an objective, but also, that could be an indication that maybe we might be heading lower. Whereas, being bullish on the dollar, what we want to see is the Sunday opening price, and we want to see price go below the Sunday opening price before making the true weekly range. But as usual, if this has been insightful for you, please drop a comment, drop a like, drop a subscribe. It really helps with the algorithm, and I'll see you in the next video.